Hey, what's going on, guys? So I did a long scan on the market, and I'm looking at a few individual names, not anything too fun this week, but I will have to say, Nvidia is one of those names where I think, first off, I'll start here. I think that we can get some sort of, and I'm not going to say that the decline is going to happen with ease. I want to see where we gap down towards, and I want to see if this range from the upper end of the chart up here towards that 160 overshoot, if that's like being defended with them pulling a sell order down, and with the level 2 kind of flipping off of like this top area of the chart, because there was a lot of volume and most of the volume is actually at that high of day, right? And then it sold off with a relatively weak close to it. The daily ever so slightly closed above the last week's high as well as the current week high, which was Monday's high, before it got taken in the Friday or Thursday session. It was a short week, right? So I didn't expect any sort of crazy action to be taking place. We'll go over to the indexes. Right now, we have slightly red futures from the Thursday close. And one thing that I would like to emphasize here on this, guys, is that we do have we have one, two, and three overnight gaps, actually four, ever since that 593 spot that we talked about as being a really nice high quality long area. There's four overnight gaps there that are remained unfilled, right? And if you guys go take a look at the 15-minute, one thing that I will have to say about this 15 or hourly is that it was a holiday week, first of all, right? So any sort of action, you kind of have to disregard what was going on within that week. That could be, a capitulatory type of move for the short side on smaller dated shorts here that are entering in, trying to, time top, and it's just really weak consolidation, weak from sellers, I should say. That leads us into this really, really nice continuation for however many trading sessions. 1, 2, 3, 4, 5, 6, 7, 8. 8 different trading days, right? But we do have 4 overnight gaps left behind. A couple things that I would like to see would be what happens off of today's high, because if you're looking at the futures session now, you can see how that's obviously a leg to the downside. If we do end up revisiting that high and closing off the NWOG early week, I'm interested to see what there would be in store for a trade-off of 625 flat. Maybe a seller will pull their orders down into that area and start selling off the NWOG if we fill that early. As far as data goes, there isn't anything to really facilitate price lower. We do have, I believe, like initial jobless claims Thursday, and then Wednesday we have wholesale inventories at 10 a.m. and we have FOMC minutes at 2 p.m. So those are two sets of data that could obviously do something and bring a little bit more volatility. I think early week will be very telling based off of like this NVIDIA chart. And I think that the NVIDIA chart is going to be something that's like very, very, very important. A level that I do have in mind, if we gap down a little bit lower, just because NASDAQ futures are slightly gapping down, would be right here off of this close from the Monday, June 30th close, right? And because why is I think that we potentially could fail this level, back test that level, find a lower high, and maybe trade this one back down towards 152, 153 again for like another double bottom type of test off of the level from Q1. I just don't really think that this is in the correct stage for it to just continue its way higher in a really nice stabilized trend. It's only one back test followed by like kind of like a tweezer bottom on the daily chart. And then what happens was we kind of sold off that high, and there was a big seller in that high on Thursday close as well. Like I said, kind of just disregarding all of the trading action that happened last week. I don't really care about it. Right now, I have some 615 put lottos for this week to then go revisit that ever so slightly unfilled gap down there at 615, 614.85 to be exact. And then we go over into some of these other charts on tech, and we can see how there's obviously a big line in the sand over here for Apple off of 214.56. It's basically the remaining unfilled area of this bear gap, and it is a triple top resistance point. So could there be a path of least resistance already being built off of this area? Yes, but on the Thursday high, we do have a sweep into that gap and a close ever so slightly beneath. So yet again, we'll see what kind of happens as well off of Apple's NWOG, or even if it wants to gap up again, if it wants to get a nasty daily candle and fade back down. I think that that would come off of like this back test of support, and that's also the tariff gap level from here August 2nd into August 5th. Or I'm sorry, that is not the tariff level, that is the August 5th level, right? And then we had the tariff stuff going on all the way throughout here, right? Which we're actually trading above and claiming above that area as we speak. But with all of that being said, guys, I would say that Apple on a pullback might be an interest of mine. To me, it does not look like the strongest of rallies that we've seen. It's lower volume consolidation, partially probably because of the holiday weekend, but lower volume consolidation throughout like the end of the morning session, leading into like the lunchtime session, and then continuously grinding its way to the upside into the close, followed by a strong orb in each and every single session. So we'll see if that character can kind of continue over there on Apple, but this is reaching into a point where I think we could find some sort of LPSY. We do have to also kind of remember right now, we're looking at breaking out of a 70 trading day compression type of range here. I mean, this is a range that has been built ever since like April bottom, whenever Apple was showing characteristics of being a strong name. This was a 51 trading day compression range that is now breaking through this week on the weekly chart, as you guys can see on the weekly right here, right? So I think that something needs to happen pretty soon, and the latest that it could happen by for the chart to look really bad and worth trading on the short side would be, like I said, taking it really nice and slow. We have our earnings date right here, July 31st. July flows expire July 18th, I believe. So we have a small little window, a 2-week window within that period where the downside becomes more and more probable, and we can start executing higher conviction shorter expiration, high conviction, a lot of leverage behind some of these trades, and it would likely align with like the Apple schematic kind of showing off of like the August 5th gap slash support from the lower end of the distribution throughout like November and December and January and February, right? And then this gap right here was technically a big break of that support, right? We kind of clinged onto the support. We didn't fully break it because they were waiting for the earnings. It had a little small little bear gap, or a small little or bear flag, I can't talk, and then it gapped down obviously throughout that tariff period, right? So if they want to sell this thing off again, it's going to happen within here somewhere, right? So look at the signs for the sell climax, look at the sign or buy climax, look at the signs for the exhaustion, maybe a smaller time frame head and shoulders. And if we get a really nice, easy looking early week continuation, this could be a really nice fade back to the downside towards the end of the week if we get a really explosive move to start off the week and maybe futures recover and they push to the NWOG and above the top of that NWOG level. And I think Apple could be a pretty valid downside trade. I just think that, you know, everyone's looking at this to be some sort of laggard that's going to automatically revisit its all-time highs, and it's just looking like free money. Everyone's looking at this like it's, you know, some sort of generational opportunity. And to be quite honest with you guys, I'm not really buying into that. I haven't really bought into a lot of things, but Apple primarily is just one of those names where I really, really, really do not care about this. This was a really nice trade last week. There's nothing wrong with that, right? But I feel like you're definitely late to the move as this starts creeping up towards where we could find phase D LPSY on the 1-week chart. And like I said, that kind of aligns with flows expiring as well as like the July OPEX as well as that earnings window, right? So with all that being said, that's Apple. Not really too interested to. I'm just really interested to see what the weekly candle does here. We go over to name. We already discussed in video. We go over to names like Microsoft. Really in no man's land. Kind of hard to trade this one right now. Basically trying to start showing. It's trying to. It's starting to show supply off of the 500 century mark here that we have, which is also a fib extension when you're pulling fibs from peak to trough of that top all the way back here, right? So I think that this one is going to call for a mean reversion pretty soon, likely also around the July OPEX, unless we get some crazy headline out of nowhere that's a little bit on the unexpected side. And you're getting some of these other names that have a much, much, much better risk to reward in terms of the long, right? There's been a very clear sign of dispersion happening in the equity market where there's names that have bad risk to reward, there's names that have great risk to reward. The names that are much, much, much better in terms of like a measurable trade with objective risk and a very ideal entry versus target would be our name like Tesla, would be our names like Google potentially. Google's not even, a setup that I would pay so much attention towards, but I think off of this 181 to 180 area, I think that control over that is going to be something that's very important for buyers to claim and buyers to hold. And then, this could potentially be a trade all the way back up towards that 192.75 bear gap. It's kind of extending a little bit further away from where I'd like it to be at. It was a really nice back test over here on the June 23rd bar. But as you guys can see, like even with Google in the 30-minute, like this name has not been trading necessarily so great, right? We had our quarterly rebalancing close here, June 27th. I think they were following through with all of that, the close before the short week, right? And that's exactly what happened over here with Google. And then it kind of just like consolidated from Monday all the way into the Thursday session. So what's going to happen off of this open slash this close over here? I think 178.50 all the way up into the open of this past week, 180.78 slash like 181, which is also aligning with this big time gap over here. I think that all of that is going to be very, very important, right? And if you pull the level, and you can also buffer that level all the way up towards 182.85. I think the tape is going to tell you more than what like this daily chart's showing you, but this is a big time level coming off of like where a breakout was throughout. You had your November highs, and then you had a really nice gap up and a continuation into the redistribution from the upper end of the chart, right, over 200, right, and over this July high, right? So I think that this one could definitely trade up towards the July high or the bear gap, but the market obviously has to, agree with that. And is that going to happen? I don't know, right? And it's kind of coming down to a point where I think we're getting into a parabolic top within the S&P, and I think we're going to be developing a higher time frame UTAD here, where the equity market has very poor returns if we were to find a big, large, scary amount of uh, of a failure beneath the 615 to 613.23, that area, right? That's how you kind of know that the UTAD is all, confirmed, put in place, and it's all there and ready to go. And we're ready for, our LPSY by the December OPEX slash, January, February 2026. It's a much, much higher time frame read here, guys. So obviously that moment could come at any point whenever you're in the territory for a potential UTAD. You got to understand that some big, fat, bearish engulfing candle, something that looks like this, can come out of nowhere. And it doesn't have to be obviously that which is traded in a singular day. I mean, that's a 3.5% decline. I'm just talking about from the weekly perspective here. You could get a candle that looks something like that, and that would completely change how the chart looks, right? And we're in that area where that could come at any moment, right? We've seen time and time again within the distribution and accumulation schematics how positive news or just news that is heavily bought comes out towards the lows. Really, really, really disgusting news, or even just news that is not necessarily sounding horrible, but that market reaction is horrible, right? And that could ruin a lot of your swing trades overnight. That can ruin a lot of your alongside exposure. What I will be watching alongside the tech or the S&P's UTAD would be a sector fund like XLF, right? I think that I think XLF and XLP. But primarily, your XLF is in a area where, you could potentially have your UTAD being set up. You have a double inside bar set up over here on XLP. XLE doesn't really have the cleanest look, but it's not the worst look in the world if you guys go to the weekly chart and you take a look. Could this be a higher low on top of the shakeout that happened from the March 31st drop? Yes, it could, right? But I think that only time will tell with a lot of these rotations and what's happening into Q2, right? You guys got to remember, new money flows around, new rotations are being made quarter by quarter, right? And they don't tell you immediately or right away. That's why, being a patient participant here and waiting for what's to show is very key and very important, right? But I will have to say, guys, ARKK remains to be one of those funds where it's holding up relatively well. There's no sort of major red flag up here above this 68.43 high. If you guys go to the higher time frame perspective here, you can see how this is a very big time base that's finally seeing its push over top of that February high. And this one was beaten to shit down here throughout that April drop all the way down to sub 40. So really no red flags over there. I mean, it's a 1 week inside bar, expansion over 71.29 and healthy trend above that would be something that doesn't really look too bad. And that maybe that could tie in with a Tesla dip. I'm about to check the 24-hour here and see what goes on with the Tesla dip. But I would be open to probably taking Tesla or I'm sorry, ARKK or Tesla if Tesla is dipping like everyone was promising. We'll go take a look at Tesla here. We are down 6.2% overnight on Tesla. So we'll go take a look at the Tesla chart now that we know. It's 8:04, so I'm finally now just getting the 24-hour quotes. With Tesla, we would be down. We're down here at 295 flat. So okay, so we're playing right around that Tuesday area, right? And it's been actually, the chart doesn't really look great because it's been super volatile throughout like November and even throughout the distribution Q1 and now throughout March it's trying to find its expansion over top of the range that was built with including the April 7th candle or April 9th candle, which is also sitting on a big time gap fill down here, which was a Q4 earnings gap. So we're down here right now. That was obviously our last week's low. That's just the first level that you should probably have marked out. If there's anything on the extended session, you can take a look at that, but there really isn't. And then down here into 285-ish, we have this big time back test of that election gap that we're trying to hold on to and develop higher lows on top of. So if this is just another one of those trades where everyone's panicking on a day like this, and then you see some sort of very large buyer stepping in at the lows of the session, and maybe you get, some nice capitulation happening throughout that early session, like something that happened over here, and then you get this really, really big time reversal type of candle here Thursday on the 15 that has a ton of volume behind it, and then you see the subsequent action to that, and you can basically kind of just conclude that they're holding the close of that day, they're filling the gap, and then they're holding it with a really nice strong tape and a really nice strong session there. If a setup presents itself like that on this Tesla gap down, I would be very open to trading this. It's actually down 7% now to 292.50. So yeah, we have that area. We have the election gap area as well as, I mean, you could take this level all the way down if you want to be pretty. That's a stretch to get down that low, but I would say around here, I'll be watching it up here at 285-ish. If we can get down to 285, and 293.21 would be last week's low. Right now, we're actually trading beneath that, down 7.5%. So with NVIDIA, we'll take a look at some of these quotes and just see. NVIDIA only down 0.5% right now on the 24-hour. It's at 158.40. So just as we were talking about with NVIDIA, we can take a look at 158.40 being just around that open on the Thursday session, right? So 158 flat, I think, is a very key spot on the chart. And yeah, I guess we'll have to wait and see what goes on there. Google, that's another name we discussed. That one's only down 0.4%, not really anything too notable there. Meta, I would say Meta is a pretty interesting chart as well, but it's pretty flat on the 24 hours. So yeah, everything is flat. I believe energy actually got smoked. Energy's almost down. The sector fund for energy is almost down 1%. Um, so yeah, um, everything else is like banks are relatively flat, but there's also not a lot of volume traded and everything on the 24 hour. What's Apple doing? Apple flat. Okay. Yep. So that's everything that I wanted to see. Like I said, any sort of long side exposure overnight is not going to be something that I really have so much interest in, just because I think that there could be something pending in the market that is completely unexpected. And I think that could come at any moment, whether that is targeting towards one sector, whether that's something, revealing about the economy, like whatever it is, any Trump remark, anything. Like I said, I've traded these things time and time again to trust the process, let things build out. Um, we did have some successful shorts over here, right? And then we kind of backed off of that short side thesis for a little bit leading into the all-time high. We got our all-time high by June 30th, and now we're basically waiting for the window from June 30th to July OPEX/earnings, which is about a month-long window here of when things are ready, right? Because down the road, the short side trade, I mean, this could be a 3, 4, 5 hour swing trade on a January contract. So it's not anything you want to miss out on or blow cash on leading up to that point, right? And that's why I said don't just flip to the long side just because we're trending to the upside. There's names that have decent opportunities. Obviously, we have names like SBUX that I would like to see this low down here on what would that be? The inside bar low of July 2nd, which is also holding the progression off of 93.35. I would like to see that hold, and I believe the 921 are also catching up to price action right now. And this was also pretty much just consolidating within that really big, heavy volume gap up candle. This is the biggest volume we've seen on the daily chart here, I believe, for SBUX. Here, we'll throw a level on that volume right there, and we'll take a look. I'm pretty sure this was the biggest we've ever seen. Yeah, I mean, you could see this is all the way back towards 02. And this was the second heaviest that I see with 585 million volume traded when this thing was $3, right? And then you come over here and you can see how we've had. Wait, I'm sorry. How much is that? Okay, yeah, no, I was gonna say much, much, much bigger volume before, but also trading at $3, right? So, yeah, very, very, very big volume is really all my point is here. My chart was also adjusting. Yeah, so heaviest volume we've ever seen within SBUX ever since. I mean, are we bigger than? What's going on here? 62 mil. 100. Oh, what? Yeah, what am I saying? I was on the wrong. I was gonna say, I was gonna say 157 million volume traded on that day, right? And it obviously was a very, very, very big time buyer because look at the underlying. I mean, this was plus 24.5%, right? And we consolidated throughout that range, and now we're trying to break above and hold that range off of the end of June's consolidation, right? Which is just looking like a really nice basing process kind of happening there. We do have our 200-day right up towards that 96 spot. So that's going to be a very big area on the chart. Kind of a popular name, not going to lie. So no overnight exposure with anything like this. Maybe just some intraday trades. We'll see what happens also with Johnson & Johnson. New quarter can bring new positioning, new rotations, new volatility in new sectors, as well as obviously the equities within those sectors. Pretty big level up here on this double inside bar pattern off of 157.65. If you guys take a look at the hourly chart, it's kind of just like high tight consolidation happening there. And from the lower end of this chart, you could see how it was like trying to break structure. It did not break structure, and then it held on to a higher low, had a really nice strong tape the following day after. This was a really nice shakeout on this leg to the downside. If you guys take a look at the weekly chart, doesn't really have the best or worst look. This is what I mean about the market right now. Kind of the same thing over here with Zoom breaking over the creek. From from this accumulation, as you guys can see, this was kind of like a shortening of the thrust period happening from the bottom end of the chart, looking pretty accumulative, right? And then from the lower end on that climactic low, we have a very, very healthy bull spread candle. And then we got a higher low to that, and now we're above the creek from where our previous 1 week resistance was sitting, which is right around here, $75. And if you guys go into the daily chart, you can see how like it had a really nice strong open to it, and then it closed pretty weak. So I'm interested to see how Zoom digests, because if it digests properly off of this daily candle's wick, that could also be a nice opportunity for the long side. And aside from that, guys, I don't really see anything within big tech, Mag 7. I don't see anything that is really too worth to trade. I might also be interested in also trading TSLL again. So we'll see where Tesla opens. I don't really have any worry about taking any sort of positioning right now. We'll just wait for the cash session and see. If anyone has any questions, feel free to ask. There are a couple other names that I have on my radar, but I'm not going to be talking about those until I actually see what I think is going to happen, because there's names that, I get a little bit speculative with, and I need a day or two more of confirmation. So there could be opportunity more towards like mid to end of week, and yeah, we'll see.